the leading power utility in Brazil. So if you're ever in Brazil, look them up. Right now, we're here. I'm here in New York, and Jeff is in Florida. And it's time for the Daily Closing Bell Report with Jeff Yastine, editor of Newsmax's Financial Intelligence Report newsletter. Jeff, up, down, where are we today?
Yeah, the indexes finished higher. We have the Dow gaining, up 56, the NASDAQ gaining 23 points, and the S&P 500 finished up 9. So again, a decent day, and we're going to talk a little bit about earnings. The kickoff of the earnings season, most of the companies seem to be coming out with earnings that disappointed Wall Street, and they would sell their stocks, but yet the overall indexes themselves finished higher.
All right. Well, I heard in passing during the course of my day, I saved the expertise for you, but that Janet Yellen had said in the Fed notes that there's gonna have to be an increase in wages of this and that before the economy turns around and interest rates go up. Is this what maybe drove the market a little bit today? That they got some good news on interest rates?
More than likely, I think that also factored into it. We've seen bits and pieces that seem to sort of indicate those sorts of things also from other elements of, the Fed minutes came out earlier this week, and there were two guys that said they thought that June ought to see a rate hike, but the rest of the committee that sets interest rates, they were basically looking at something further out. And I think all this fits the pattern that you and I have been talking about in recent weeks and elsewhere in past months, which is they're going to keep rates this low for as long as possible. They're going to go out as far as they can before they ever have the fairest semblance of a rate hike, because they want those wage hikes. They want the economy to get good and hot, even though they're not going to come out and say it.
Yeah, all right, let me ask you quickly about the Chinese market. A lot of people thought the Chinese market would cool down, but it hasn't, has it?
Well, the weird thing is, in the last year to 18 months, the data out of China has showed the economy has been slowing down. We've heard before about how hot their real estate market was. Now it's ice cold, like what ours was in 2008, 2009. The central bank there has been making noises about doing more money printing of the kind that Bernanke and Yellen have been doing. And somehow in the last 2 or 3 weeks, suddenly the Chinese stocks have gotten really hot. And I think it's because of all these factors that the economy hasn't collapsed there as many people thought. And you've got this central bank talking about quantitative easing, and people are just piling in. So you're seeing these enormous moves in a fair number of Chinese stocks in the last 2 weeks.
All right, very quickly, Jamie Dimon said that if there's another financial problem, it's going to hit harder than ever because so many banks have been regulated out of business or out of the ability to help going forward. That's a concern.
Yeah, it is, and the reason why is banks and their investment banking arms tend to work as market makers, and if they're not standing there taking a price, or somebody who says, I got to sell this thing, then inevitably the price moves much lower, much faster, because there's no intermediaries. That's what he's saying. We'll have to see whether it actually comes to be true.
Right.
Hoping we never get to that point.
Absolutely. All right, Jeff, thank you. We'll speak to you tomorrow as we round out the week, see if we can make another up day on Wall Street. But folks, let me remind you that you can find out more financial news by going to Newsmax.com and clicking the finance button, that's the finance button, I should say, at the very top of the page. There it is. Just go to Newsmax.com and click the finance button. It's at the very top of the page, and you will be treated to really all you need to know regarding your finances for today and going forward. As we go forward, Give Me 5 is next.